Hello, options traders. Steve Ganz here, and I am working on some of the additional 101 series classes. Hope to have maybe a couple more of those out next week. In the meantime, I do have a trade idea that I'm sharing. This is a trade I'm personally making. It is a leap trade. This is a long option. So this is almost like an investment, like buying a stock, except I'm doing it by buying a long call instead. So I want to walk you through kind of my assessment of this particular stock, some of the fundamental analysis that I go through on it. So this stock is SQ, formerly known as Square, and now it's known as Block, but the symbol is still SQ. Now this is a weekly chart of Square, and we can see that this thing had been in a range in roughly the 90 to 50 range, and it had traded there for a long time, then broke out and just rocketed to the upside to just shy of $300. Then it fell right back down, and now it's been back in this exact same range, roughly the 60 to 90 now. So what piques my interest in this? Well, they just had earnings. The earnings were good, and we can see this significantly increased volume. We see the spike up. Again, this is a weekly chart. Because I'm looking at a trade that's going to last a couple years, I look at longer term charts to help me in that decision-making process. Now, I also personally use another tool. I have no affiliation with them, but it is a product called Fast Graphs, and I think it's a very good product for fundamental analysis. So on Fast Graphs, what they do is they plot out this orange line is what is considered the fair value, if you will, of a stock. And they show you how all that's calculated, etc. But the fair value of this is increasing. That's a good sign. And over here, it was way, way, way overvalued. So, somewhere up in here, it may have been a good short or good to buy puts on it, or at least sell covered calls if you own the stock, but I didn't. So anyhow, now we're back in this range, but the earnings in this case, or the fundamentals, are looking better. This is the adjusted operating earnings. I can come in, I can look at basic earnings, which are also growing. I look at the operating cash flow. The operating cash flow is definitely moving to the upside. This is the free cash flow. I also like to look at earnings, the earnings before EBITDA, basically. So I take a look at that. This is looking to project nicely going forward. These are projections. The dashed lines are projections. The solid lines are actuals. And then I can come in. I also like to take a look at sales. So I want to make sure that sales are growing, and we can see sales are growing in this too. So there's a lot of fundamentals that come into play here that show me that this thing is moving in a favorable direction. So when I come back to my chart, that leads me to think that we might get a breakout. If we do get a breakout, in the past, this thing has run. Not just this stock, but usually when stocks, what I call coil up, they trade in a range for an extended period of time. When that range finally breaks out, all of a sudden this stock is hitting a whole bunch of new high lists, new highs for the year, new high for the past 2 years. It hits breakout lists, people that are monitoring breakout stocks. At that point, lots of additional buying can come in. Now, I am going to go and I'm going to buy this leap. So I'm going to come in here and I'm just going to build. In this case, it's going to be a long call. This is going to be in SQ. And I am going to go out as far as I can go out, which is January 15th of 2027. I really need to bring my range back here in order to do this, to show the full potential of the range. And let's just say, this thing gets back into the 130, 140 range, maybe even up to the 200 range over the next 2 years. Well, I mean, if we get up into that range, I'm up $9,000 or so in this trade off of a roughly $2,500 purchase for my long call. And I do need to keep in mind, I'm going to go ahead and save this trade, and I'm just going to reference that this is a leap and essentially kind of a stock replacement, because if I went out and bought this stock, it's currently trading at $83. If I bought 100 shares, that's going to be $8,300 instead of $2,500. So we'll go ahead, save this trade. I will copy the link. I will share it down below. If you like this sort of content, this concept, ideas, please give me any comments if you would. Make sure you like and subscribe. And my goal on this is going to be to watch this carefully. If this thing pulls back into that, 60 range, I will probably go ahead and cut it, and it will be a loss. I mean, it'll be probably $1,000 loss or so at that point if that happens. If this breaks out, I may look to come in and add to this position, buy another leap, another long call on a breakout. If it gets up into maybe this 130 range or so, that's when I might look to start selling covered calls on that position. Shorter term covered calls, much like you've seen me do with Avgo. If you haven't seen those videos, look for the Avgo series of videos, because Avgo was a leap I bought a couple years ago. It has exploded in value, up 6 figures in that, and now I sell covered calls or call spreads against that position. So my goal is to maybe be able to do the same thing for this at some point. I'm not expecting this to go like Avgo went, where it becomes, goes from $45 to $180, but you never know. So I am bullish on this. I do like the looks of it right now, and I'm willing to go ahead and take that stab at it. So just wanted to share this trade, and this is what that trade looks like in OptionStrat. And again, I'll share the link below. Take care, everyone.